Hi, and how are you? I hope you are having a fantastic day. Today, we're going to talk about cryptocurrency news. We're going to talk about a specific artificial intelligence robot. It's actually a computer program that predicted the current Bitcoin price, and now it predicts a new all-time high for Bitcoin. So let's get into it. I am not a financial advisor. This is not financial advice. This is my opinion. I am not smarter than you. You are smarter than you realize. Do not trust what I say. Do your own research. So, there's a model, and it's really, you could call it a model, but it's really a artificial intelligence, which is a computer program that has predicted the Bitcoin price drop to $8,000, and currently it says that the bears are done and the bulls are back in control. In other words, they're expecting the price to go up. So let's get into this. The Bitcoin BTC bear trend that brought the cryptocurrency from 14,000 all the way down to 7,700 is over, according to a price model anyway. In early August, a cryptocurrency investing boutique unveiled a price prediction model that used Facebook's profit machine learning software written in Python. Burger Crypto, as the upstart is called, revealed in their model that they expect Bitcoin to fall to the low $8,000 region in October. And that's exactly what happened. In October, so today is October 20th, 2019. And so we're approaching the end of October. And at the time of this recording, Bitcoin is trading at the $8,200 price level, but it has slipped down. I didn't think it slipped down to $7,700. It may have, and I just missed that. It may have been one of those where it drops down to that for just a moment and bounces back up, but it's been running right around the 7,900 to 8,200 level through a good portion of the month of October, which is exactly what this price model predicted back in early August. And so the fact that they had been able to predict this at a time, well, let me read on. I'm jumping ahead of myself. At the time, and they're referring back to early August, at the time the model was published, analysts were calling for Bitcoin to resume its uptrend to a fresh all-time high beyond 20,000. But as you likely well know, Burger Crypto's machine learning-based model turned out to be correct, with Bitcoin falling as low as 7,700 earlier this month as bear pressure mounted. What's interesting is that the same trend-centric model shows that Bitcoin is poised to return to a 5-digit price point. And so it's interesting that it was accurate enough to predict a low price when everybody else was expecting Bitcoin back in August, and myself included. I personally expected Bitcoin to go up and hit this $20,000 mark, hit that $20,000 all-time high. Unfortunately, I was wrong, and it did slide down into the $7,700 range. I don't remember it actually hitting that price point, but it may have, and I just may not have caught that. It may have been a very, very short period of time where it actually touched that and bounced right back up. What is interesting is the same trend model shows it's poised to return to a 5-digit price point, which is 10 grand or higher. The model in question that Burger Crypto created is derived from Bitcoin's historical returns and the stock-to-flow ratio. Now, the stock-to-flow ratio has been used a lot by an organization called Plan B. Basically, what that means is the stock-to-flow ratio has historically been used with heavy metals such as gold, silver, platinum, and other heavy metals, other things that get mined out of the earth. And they look at what is currently the stock, the existing like if you're talking about gold, they look at how much gold actually exists in the world versus how much gold is coming out of the mines on an annual basis. And so based off of the ratio between the stock or current inventory, you could say, and the flow, which is about how much is actually being mined and created and being pulled out of the earth, they come up with a ratio, and that ratio is really good at accurate as far as predicting price trends and future prices and that sort of thing. And so they're applying the same, Plan B was the first one that I know of that did this, and they applied the same stock to flow ratio to Bitcoin because Bitcoin has a very specific amount, and there is a very specific amount that's mined or created on a daily, even hour or 10-minute basis. They know exactly what that amount is. And one of the things that happens is once every 4 years, the amount of cryptocurrency in Bitcoin, I should say Bitcoin because this is specific to Bitcoin. Some cryptocurrencies include this and some cryptocurrencies don't include this. So you have to evaluate this on a cryptocurrency by cryptocurrency basis, because there's many cryptocurrencies out there that you don't do any mining on them. They just created a certain amount of that crypto, and that's the amount of crypto there is, and it doesn't change. Whereas with Bitcoin, there's a certain amount of new Bitcoin that's created every 10 minutes, every hour, every day, every month, every year. But every 4 years, that amount is cut in half. And so right now, there's about 12.5 Bitcoin that's created every 10 minutes. And as of approximately, and I say approximately because it just depends on how quickly we generate the blocks. So the time is not a set in stone time, but it will fluctuate a little bit. But approximately sometime in May of 2020, we're going to go from 12.5 down to 6.25 Bitcoins per 10 minutes that's actually created through efforts in cryptocurrency mining. And by cutting the new Bitcoins in half, that makes Bitcoin's value go up because it becomes even more scarce. It increases the scarcity of Bitcoin because there's less new Bitcoin being created. So the stock to flow ratio and forecasted by Facebook's profit. So they're combining what Plan B has been doing for cryptocurrency for several years now, and also applying some of Facebook's profit, which is a Python artificial intelligence algorithms that is analyzing the information it got from the stock to flow ratios. And because I'm not familiar with what Burger Crypto has built into what they're using Facebook's profit for, I'm not familiar if there's any other metrics or any other information that they're feeding into the algorithm, feeding into the artificial intelligence in order to come up with their price predictions. So anyway, I found this very interesting. As can be seen by the model below, shows that Bitcoin in October begins to trend higher into Halloween, early November, and then surges into an all-time high. So let's take a look at the numbers that they're predicting here. I hope you go away here quick. All right, I guess I got to scroll back down. There we go. All right, so you can see right here, this is September 11th, and they were predicting that the price would drop below $10,000. Now this bottom line is $7,500, and they were saying that sometime around 10/31, which is October 31st, they're expecting it to cross into the $10,000 price range, and then around December 20th, they're expecting $12,000 price range, and then here is March 29 of 2020, and that's when it's just hitting $15,000, and they're expecting a surge up to $27,500, which is going to occur, according to this price model, somewhere between 5/18 and 7/7. So somewhere just before July 4th, July 7th of 2020, they're expecting it to hit a new all-time high of $27,500. Now, the model coincides with a similar one created by Twitter analyst Data. Per previous reports from News BTC, their model says that the downtrend has decisively ended and that Bitcoin will surmount $10,000 once again mid-November, just a month away. The fundamentals seemingly back this resumed price appreciation. In recent CNN interview, Galaxy Digital's Mike Novogratz gave a number of reasons why Bitcoin is likely to see a growth in demand. These include negative interest rates, geopolitical unrest, and mistrust in centralized systems such as central banks. And so they go through some more information on each one of those 3 points about negative interest rates, geopolitical unrest, and centralized systems in the rest of the article. I'll post the article if you want to go and look at the rest of what they're saying. But I agree with what they're saying because of other information that I've learned. I wasn't really thinking of those 3 points, the negative interest rates, geopolitical unrest, and mistrust in centralized systems. A lot of my thesis or theory came from information I've learned about the number of institutional investors and deep pocket investors that are actually getting involved with cryptocurrency. I recently made a video all about that, and I will add the video to the link below as well, so you can check out both this article and then the article or the video I created talking about how institutional money is flooding into the Bitcoin market. And so I hope you find this interesting. I am fascinated with all this. In the meantime, how can I be of service to you? If you have any questions, please leave them below. If you disagree with me, please politely disagree with me in the comments below. I would love to hear from you, because the best way to learn is through a polite disagreement. We can learn from each other and we'll end up the better for it. So in the meantime, like, subscribe, and hodl, and I hope you have a fantastic day.